Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. That means that the equities markets in the United States are closing. Settlement is going on as we speak. And we have the Dow Jones Industrial Average, which made a stab at 17,000 today. In fact, the high, 17,004, could not quite close at that point, closing higher, but in essence unchanged, slightly higher. As you can see, we're going through settlement, currently tracking up about 25 points, 26 points at 16,989, 16,091. You've got the final orders that come in market on close, and that's what you see affecting the market as we are right now, straight up at 11 o'clock. Now, Standard & Poor's obviously closing higher today, up about 6-7 points at 1988. It had a low of 1978 and a high of 1994. As you can see, it looks like it will close up solidly about 7 points on the day, but well below that current resistance area that we really want to see it break above. So traders, no doubt, a nice recovery, very, very slight recovery, I should say, after yesterday's dramatic sell-off. That's this red candle here. And that, of course, was following this market moving up quite swiftly and actually testing this 2003, which is what we're looking at in terms of a critical area of former support right here, to some degree here, and absolutely resistance as it plunged below that particular price point. It continued to fall and actually fell below the August meltdown lows at around 1830, and you can see that it actually tested the area of around 1800. Now, interestingly enough, if you want to see where that 1800 fits in, you really have to kind of pull back the curtain, so to speak. We've done just that by compressing the chart. And let's take a look at this. I might have to pull it back a little bit further, but as you can see, we certainly matched these lows that came in. And this was a pretty severe correction when it came in. Of course, this was a pretty dramatic correction right here, but you had them all along the way in which the market would peak and then come back down. So you had different areas. This particular area, actually, you had ascending lows here, but then we went to these record tops. And this, of course, was going in to the final part of 2015 up until August. And this is what I've labeled as the August meltdown. Of course, real concern with the Chinese economy. It comes down. From there, it forms that W that we talked about, and I believe that we are seeing that W once again. Now, that being said, when we look at this market right now, no doubt we have some real resistance, and I really will feel more comfortable if and when this market trades above this particular price point, because I want to see it challenge our 200-day moving average, which of course has come down dramatically from these highs here, which of course is when we were at record tops back in the last quarter of 2015. Now, if we take a look at this particular price point, 1980, kind of draw across, we can absolutely see that there is a little bit, not a lot, but a little bit of technical evidence that it was at one point a supportive price point on a technical basis. It currently is supportive just today, and if we get a nice bounce up, of course, we will consider this to be a pretty strong level of support here at 1980. So traders, considering the rally that we have seen in the equities markets, you can almost pull it up and overlay it on the crude oil chart. And what you'll see is that you have this dynamic double bottom here at about $26 in crude. We're now trading up almost 5% on the day, 38 and change, 38.17, 38.18 and change in that area, up 4.63% or about $1.70 per barrel. We have this one area right here in terms of a technical perspective in which we saw it have some resistance, and the market has absolutely exceeded that. Now, this, of course, is a weekly chart. When we converted to a daily chart, of course, we had downside pressure in the market yesterday, and of course, that correlates very, very strongly to this downside pressure we saw in oil yesterday. I've just converted it to a daily chart. You can see the dynamic move that we got today in which it opened below and closed above, that is an engulfing bearish. However, there is an actual candlestick pattern, which by definition, it's called a last engulfing bullish. But by definition, it has to occur after a defined and very, very strong uptrend. And during that uptrend, you will get this bearish candle, but then you'll get this final engulfing bullish, and that's actually signaling lower pricing. Now, it's a very, very rare pattern, that last engulfing bullish, because you do see engulfing bullish patterns come in throughout a market as that market moves up. You're really looking for it the strongest of an engulfing bullish, of course, is after a defined downtrend. You can see that here. You get a defined downtrend, then you get that engulfing bullish. Here you get a dark cloud cover. It's actually an incomplete dark cloud cover because it didn't close at or below the midpoint of the prior candle, which I'm going to guesstimate to be right around this area here, but an incomplete dark cloud cover. Your confirming candle market comes down. So what can we make of oil? Well, as you know, my belief is that $39 to $40 should be the top of this market for right now, and then I would expect some sort of a correction. If that happens and equities follow suit, of course, we might see a little downside pressure in the equities markets. We are long our S&P at 79, stops below 65, and current market above that particular price point. Recommendation, maintain your current position, your long position, maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another Trending Markets.